All right, what's up, y'all? It is Saturday, January 30th. The month of January has come to an end. So this is the January P&L video. Got my hoodie on because it is cold as shit in the office. But before we get jumping in, I did want to let y'all know I did change my Twitter handle to Focused Options. So if you're looking for me, you can find me there on Twitter at Focused Options. But for the month of January, get jumping in, show y'all my Thinkorswim account. So in this account, I've closed just about $21,000 of profits between that account and a smaller one. Here are the numbers. Move my ass out the way. So here's all the trades I've closed this year. And those have all been good for just about $29,000 of profits. And as far as open positions heading into the month of February, got a couple of credit spreads on Nvidia, PINS, INO, Amazon, NEO, PLTR. And I did throw on a little bit of a hedge there just before the close on Friday, just in case this market wants to get freaky into the new week. Show you guys things here from this point of view. The biggest win in the month of January was the pursuit of that Amazon weekly squeeze, which I still have a position in, and ironically, though I made the most money this month on Amazon, the weekly squeeze actually hasn't done anything yet. So Amazon, between a couple of different put credit spreads, between a call credit spread that I use as a hedge, and then ultimately the big put credit spread here, which brought home the bacon, which we got to change that up to green. The pursuit of the Amazon weekly squeeze has brought in $22,000 of profits. My biggest loss of the month, ironically, because who the hell tries to short this market, was a hedge with a call credit spread on the NDX. So the call credit spread was good for about a $7,200 loss. And if we sort everything I've traded this year by name, Amazon's been responsible for $22,000 of profits. You got PINS at 6,100, Blink, Guild, Tesla. Then towards the bottom of the list, Nike lost 1,200 there. Lulu lost 15. Square 1,800. AMD, you little bastard, 4,000. And then the hedge there on the NDX. So, looking at these numbers here, this is kind of what I plan for and what I expect over the next few months, is that a couple of names bring home the majority of the profits, and everything else is just kind of a wash. The decent sized profits, they take care of the losing trades, etc., etc. So, all of this looks pretty good, No complaints about making this profit, but what a test of patience and discipline the entire month of January was. The craziest thing is bringing home the good profits despite really not catching any big moves. So the Amazon weekly squeeze never did anything, just collecting some premium. The same thing for Nvidia, cut a couple of nice directional moves in Blink, but as a general statement, this is just a lot of premium collecting. So closed P&L 28,000. We discussed Amazon was the best, NDX was the worst. And the lesson of this month, patience, discipline, and then just constantly asking myself this question: has anything changed? Victories of the month. Personally, I had to sit through two of my biggest daily drawdowns ever, ultimately to bring in a really profitable month. So the day that they were storming the Capitol, I think the account had a drawdown of about $17,000 that day, and then just this most recent week, the account dropped a good $19,000. Now, we bounced back the next day, we get all those losses back. I'll post up the screenshot. But, as I'm going through this process of, obviously trading with bigger position sizes, trying to scale my account and just take my skill set to the next level, such a big part of that, is thinking in terms of percentages. Everything is relative. But of course, seeing, negative $19,000, it's going to take some work to be able to see that and sit through it comfortably. So, sitting through two of my biggest drawdowns, and honestly didn't let it impact me all that emotionally. My mood was steady and consistent, good energy, able to spend time with my family and friends and my girlfriend. Most importantly, just not thinking about those open positions. In the past, market closes at 4 o'clock and my brain is still on the charts. So, as I'm scaling in position size, as I'm trying to take my game to that next level, this is the biggest victory of the month for me. The 30,000 is awesome, but being able to sit through those drawdowns and not letting it impact my emotions or, life outside of the market, that's a big victory. And rather than focusing on, shit, I'm up this much, I'm down this much, all of my focus this month, and if I can just keep on doing this, I really think I'm going to make big strides this year. All of my focus was into the structure of the setups. Right? Not getting caught up in the P&L, not getting caught up in the day-to-day noise in the market, but just repeatedly asking myself that question: has anything changed? So when I take an entry, and we'll take a look at a couple of the setups, I'm taking my entry for a swing for very specific reasons. There's a structure to the setup that leads me to believe there's a good probability that thing's going to fire or make the move in our direction. For the setups that did change, meaning, I took that good entry, they had that good structure, and then the structure lost itself, I cut those trades off without hesitation. For the setups that did not change, that despite the day-to-day ups and downs and the noise, never ruined the structure of the setup, I held tight, specifically with Amazon and Nvidia, ultimately with Amazon getting rewarded. So the biggest victories of the month was just the control of the emotions and a good, solid focus on the structure of the setup and not that damn daily P&L. As for my biggest mistakes of the month, a little bit of greed here. So on 2 occasions, I had an opportunity to get rid of my Amazon spread for a good 70% of its max profit, along with all the positions I had in Nvidia. So with Amazon, because I was not willing to take the easy money off the table, I sat through like 2 to 3 weeks of chops and pullbacks and a lot of gut checks, ultimately collecting the premium, but I could have made my life so much easier. Same thing for Nvidia. At one point, I did have an opportunity to close $13,000 of the potential $7,000 max profit between all my spreads in Nvidia, did not take that money off the table, and now here I am still swinging onto this thing. So mistakes of the month that I need to correct next month is a guy who trades put credit spreads is have that freaking order set to buy back the spread for 70-75% of the max profit and let it do its thing. To me, I value peace of mind way more than profits, but that isn't a reflection of this. Holding on to Amazon for a couple extra $1,000 has me sitting through uncomfortable pullbacks for a couple of weeks, none of which changed the structure, so nothing changed with Amazon, but we can make our life a little bit easier. So that's something I need to fix next month. And just, one of the bigger questions is, how big's your account? How big are your position sizes? So I would give you all a number as far as, I grew my account by 5% this month, 10%, 20%. A little bit of a tough thing for me to do is I'm constantly, unfortunately, but fortunately, pulling a lot of money out of the account this month. I've had to take $30,000 out to pay for a wedding, things of that nature. So I can't really give you a specific as to, hey, here's how much I made percentage-wise. I've had up to $200,000 in the account this year. I've been wiring money out left and right. As of right now, there's $140,000 sitting in here. So average position sizes, they're going to range for me anywhere from $5,000 of risk to $15,000, with the biggest position this year being one of those put credit spreads in Amazon where I had a $26,000 max potential loss. But the major thing I want to focus on with y'all here as we wrap this video up, has anything changed? We find those good setups. You take your entry, hold that shit until something changes. Ignore that day-to-day noise that 9 times out of 10 is literally just trying to shake out traders. Has anything changed? So let's take a look at a few charts and get jumping into that mindset. So we got to start with Amazon here. Beautiful weekly squeeze. So when I'm building this position in early December, why am I taking this trade? The structure. All I want to focus on this year, and really all I've been focusing on, is trading weekly, 3-day, and daily squeezes. So the structure of Amazon at the time of my entry in early December was a good bullish structure. Weekly squeeze, holding above the weekly 21 EMA, stack moving averages, and it's an orange dot squeeze with the Squeeze Pro indicator, so it's as good as it gets. Now, if you look at Amazon here from a daily chart perspective, for starters, there was my opportunity right there to take the $14,000 off the table. I wanted a little bit of extra, being a greedy prick, and what happens? I'm sitting through this, I'm sitting through that, ultimately closing for the profit I was looking to get originally a few weeks later, but that isn't much fun to sit through. But how come I sat through that? This ugly day, that day, testing that 30-50 level. I'm holding through all that noise because I'm trading the weekly squeeze here. I'm holding this position, I'm entering this position because of the structure of the weekly squeeze. I cannot be getting shaken out and leaving this position until something changes. Now, one could argue, you closed under the weekly 21 that week. Did we really though? Technically, yeah, but it's going to take a little bit more for me to get shaken out here. So that's the lesson. Nothing changed. Now, take a look at, say, Nvidia. It's the same thing here. I took this trade because of the structure of the weekly squeeze, and the weekly squeeze is the setup I'm pursuing here, looking for all this energy to get released to the upside sometime within the next few months. There's been ups, there's been downs, there's been a lot of noise here, but nothing about the structure of this weekly squeeze changed. And to me, the structure begins to change when we're closing well under the weekly 21. So yes, has Nvidia been a good, fun trade to hold through? By no means at all. It's had rollovers, big pops, big fails, all kinds of shit here, but the weekly squeeze has remained beautiful. So I continue to sit there, sitting through that day-to-day chop, holding on to my put credit spreads, and we're slowly, bringing in those rewards. So looks like as of right now for Nvidia, we've only closed about 2,200, but with the positions open right now, holding on tight as long as the structure isn't changing, we can potentially bring home another 14,000 between the two trades there. So those are examples of trades that I took because they had a bullish structure, trades I continue to hold through and get rewarded by doing so because they maintain that bullish structure. Let's compare that to some of the losing trades like Lululemon. I was approaching Lulu because of the structure here. Weekly squeeze, bullish momentum on the histogram, we're holding above the weekly 21. I was comfortable holding my put credit spread on Lulu until something changed. This week, something has changed here. We're losing our structure, we're breaking under the 21. This setup no longer has those characteristics that brought me into the trade. Once it loses that structure, I should no longer be present because everything has changed. Lulu is so much different than Amazon. They've both had ups, they both have downs, they both chop around. Lulu lost its backbone. Lulu completely gave out that solid bullish structure. Amazon did not. Lulu gave out that bullish structure. Nvidia did not. Another trade that didn't work out was Nike. Nike, we're jumping into this looking at the daily squeeze. Above the 21 EMA, bullish histogram, you had stack moving averages. What happened to Nike? Break under the 21, break under the 50. Something has changed here. So we get out with no hesitation. So that is January in a nutshell. What setups am I focusing on? The same setups I want to focus on all year long. Gotta have a weekly, 3-day, or a daily squeeze. So for Amazon, I'm all over this thing because we have a weekly and a 3-day and a daily squeeze. The same thing goes for Nvidia. You got a weekly, a daily, and you got the 3-day squeeze. So I love those setups. Had a quick little trade in Blink. Why did I trade Blink? Because Blink was a daily squeeze. We took a position and we're making some good money in PLTR. Why are we trading PLTR? It's a good daily squeeze. Above the 21, bullish momentum on the histogram, stack moving averages. It's got a good bullish structure. We have been trading, what else have we been trading here? INO. We got a position in INO right now. Why? It's a good daily squeeze. So just continuing to focus on my go-to setup. It's the lane I want to stay in. It's the lane I'm trying to master. But I think that's the biggest lesson I've taken from this month. You can focus on what brought you into the trade, what structure was present when you took your entry. Can you develop that patience and that discipline to sit through those daily ups and downs and all that BS, holding on tight until something changes? So imagine you're taking swing positions here in Amazon, you're focusing on the weekly squeeze, but you're getting shaken out on that little dip, or that little dip, or that little dip. Has anything changed about this weekly squeeze and all that noise? Or is Amazon not doing the same thing it's been doing since September? So as I'm heading into next month, show you guys the open positions I got here. So for SPX, I did add a couple of hedges here on Friday, just in case things get freaky into Monday. So I got February 5th call credit spreads on SPX with a short strike here at 3,800 and bought the 3810 as protection. So on that position, CSPX, right? So between the two of those, I took two different entries. We're looking at about 2,800 plus it. Call it $4,000 in max potential profit, risking about $11,000 or $12,000 for Amazon. Ain't nothing changed about that weekly squeeze, so I ain't going anywhere. I do have March 19th expiration put credit spread with the short strike at 3,000 and then the long strike at 2,980. So yeah, I am holding through earnings, and I'm basically placing a bet here that this beautiful weekly squeeze isn't going to fire to the downside, dumping below our short strike at 3,000, though it is certainly possible. So holding on tight to Amazon, and also holding on tight here to pins. So this is why I love my credit spreads. Been pursuing the daily squeeze here in pins for all of January, have caught nothing in the form of a directional move. However, pins has been responsible for $6,000 of profit for the month of January, just collecting that out the money premium with the put credit spreads. So I do have a little bit more pins left, February 19th expiration, with our short strike at 65, and then bought the 64 as protection. So here's another one where, yes, I'm going to hold through earnings. Here's the thing. The risk on this current trade is about $6,000. If this goes to zero after earnings, I'm pretty much break even on pins. Now, I'd much rather keep the $6,000 of profit, but I have chosen to hold through earnings here. So I got me some Nvidia, got me some pins. For Nvidia, still holding on tight here. Love this weekly squeeze. So I did take a couple $1,000s off the table this week. But heading into Monday's session, I do have a February 5th expiration put credit spread with a short strike. Nice out the money at 500. Bought that 490 as protection and got a second credit spread sitting here for February 19th expiration with a short strike at 520. And then bought the 515 as protection. So that one a little bit underwater. For PLTR, one of our better trades from the Simpler Trading Options room this week, we took a position on the 22nd, caught a huge explosive move, and then we did add to the position the day later on the nice pullback to the 8. So we did take off one of those credit spreads for a good chunk of its max profit, and we got one more sitting there waiting to bring home some premium for March 19th expiration with a short strike at 23 and then the long put at 21. So our short strike is way down here at 23. Going to continue to ride that wave, bringing in the premiums. Also have a position left in INO, catching a nice move here out of this daily squeeze. So for INO, do you know INO? February 19th expiration, sold that 10 put, bought the 9. So we are right under that daily 21. So we got some INO, some Nvidia, some pins, some Amazon. I covered the SPX call credit spread. We also have a position here in NEO. So NEO's going into a brand new daily squeeze. We got a pretty good looking 3-day squeeze setting up here. So for NEO, we took this entry yesterday with the put credit spread. And we have March 5th expiration. So 30 days on this bad boy. Short strike at 50 and then bought the 45 as protection. So all we need here is for NEO to keep its ass afloat and not drop down towards 50. And ultimately, we got some good premiums coming in. So holding on to some NEO, holding on to some INO, some PLTR, some pins, some Amazon, some Nvidia, call credit spreads on the SPX as a hedge. And that's about it, y'all. So looking forward to seeing what the month of January brings. And as I continue to try to, go through this next stage of my trading journey, playing with a little bit more size and just really trying to work on that discipline, that patience, and constantly asking myself, has anything changed? Now, don't get me wrong, right? Amazon and Nvidia, those trades could fall apart. And at that point in time, I got to take my exit. But I really want to get better at being patient and holding on through all that noise until something has changed. So those are the numbers for this month. For me, way more important than the numbers was the fact that I was able to sit through 2 of my biggest intraday drawdowns ever without really having much of an emotional reaction. To me, that's important progress, and that's way more meaningful than the closed P&L. So that is that, y'all. I'll let you know how these open positions go. Gonna be interesting as I'm holding through Amazon earnings and Pins earnings. So shall be interesting. But I appreciate y'all for watching as always. If you haven't already, go on ahead and subscribe. You can catch me in the Simpler Trading Options room Monday through Friday from 10:30 a.m. to 11:30 a.m. Eastern. And in the description of this video, I do have a link for a free trial that's only good for the next couple of days. So if y'all want to join the options room, trade with myself, my brother Chandler, John Carter, Henry Gamble, Sam, Danielle, the whole gang, come on over. We'd love to have you. Talk to you soon, guys. Be safe. Peace.